Hello, folks, and welcome to your Onchain update for the 18th of April. Now, what I want to cover today is actually inspired by a chart that one of my colleagues developed, a workbench chart, which is really, really cool. Basically, there's always been this kind of question in my mind. Some of you may know the metric called dormancy. Dormancy is the average age of the coins that are being spent. So think about this, right? If the average age of a coin that's being spent is 2 months ago, that means we can go back and look at that price 2 months ago and say, well, it gives you a bit of character around who that person is, right? Where did they acquire their coins? This is the question. If the average age of coins being spent is 600 days ago, we're talking about almost 2 years, that price is very different to where we currently are. So the question was, how can we actually visualize where people are coming from? Right? What is the kind of area of the price chart where people acquire their coins that are currently spending them? And we may well have a solution to this. So I want to actually take you through a couple of things. It's in the long-term, short-term kind of concept, but I think this might be a really nice way to just visualize many of the concepts and topics that we talk about in these sessions and give it just a little bit of character. So this should be a bit of fun. So let's start this thing off with, we looked at this the other day, but this is the long and short-term holder threshold. So remember, when we talk about long and short-term holder, this is a time-based thing. It's 155 days. Often we talk about long-term holders as hodlers, short-term as speculators. I would actually encourage people to think about it more in the sense of, when did you acquire your coin? If you're a long-term holder, you acquired it at least 155 days ago. If you're a short-term holder, you acquired it within the last 155 days, as these shaded areas cover. And we talked about this the other day, where basically we're at this point where everyone who bought after FTX is now a short-term holder. Everyone who bought pre-FTX is a long-term holder. And as you can see, we've been at prices substantially higher before FTX than where we currently are, right? At the $30,000 level, right, which we're currently hovering around or just below it at the moment, we spent the vast majority of 2021 above it with basically a very short detour here in July. That was really the only time we got down to our current price level. We spent most of 2021 up here. So just a very, very basic thesis would say it's probably likely that people who are spending, who are long-term holders right now, I mean, you could in theory go all the way back here, but people who bought their coins down here, I mean, I'm not thinking about spending my 2019 UTXOs. Come on. But there are, I mean, there's always going to be some of them, but the vast majority of long-term holder spending is more than likely going to be coming from this 2021 era, right? That's our thesis, just kind of makes sense. And quite often I find with on-chain analytics, because Bitcoin is so raw and so organic, I'm actually amazed how often those just simple, what do you expect to happen? Almost always I find this play out in the data, right? Obviously then the secret becomes what you actually know to look for. But anyway, what we're basically seeing, there's a couple of things I want to touch on, but the key thing here is just revisiting this threshold so we can kind of establish, and our thesis, our running thesis is people spending right now who are long-term holders are probably from the 2021 era. They're in the phase of give me my money back, which means they're about 30K, or I want to take this exit liquidity because I've been down for a year and a half, right? Get me out. Now, just taking that concept, I think this is a really, really powerful chart. This is looking at the price distribution of where people accumulated their coins, obviously keeping the exact same color coordination. There's kind of a couple of buckets. This is those long-term holds we were just talking about, right? 50, 60, 40K. Now, there's no question. I got a couple of UTXOs up here, which I'm not spending. That said, there's going to be people who will just get out of this thing, right? This is kind of the nature of the beast. It's how it plays on. Here's this volume that is just probably dormant and not going anywhere, right? These are people waiting for much, much higher prices, in my view. Also note, up to about 25K, this cluster here is kind of a nice, healthy balance of post-FTX, short-term holders, and pre-FTX. This is between Three Arrows Capital happening and FTX blowing up. These are people who bought once FTX blow up and on our rally higher. So you can see there's a very, very healthy cluster down there in that 25K and below level. I believe that is a very strong, sound level of support. That's where, I wouldn't be surprised if we tag 25 at some point. I think this looks very healthy as it currently stands. Now, there's also a zone between, say, 26 and up to 30, where you can see it's mostly short-term holders. Some profits were taken. Some people took their coins from these higher levels down. But there's a second cluster in around that kind of 26 to 30s type zone. That's the kind of area where we could probably get a bit of a test of, right? Get to the lower end of it. We're currently near the upper bound of that zone. But you can also see there's clearly a regime shift above us. This is kind of the last, I would call it bottom formation cluster, even though I don't really consider above 25K bottom formation. This is kind of the first rip above, right? These are breakout buyers, people who are a little bit more exposed than people down here at 16K. So this is kind of my gut feel. I wouldn't be surprised if we got to the bottom end of this. I also wouldn't be surprised if we rallied higher. I don't really have a great deal of conviction either way in the short term because there's not really any gravity in either direction. And that's fine, right? We're kind of in a bit of price discovery and the market does need to prove itself from here on. 25,000, that's where I really do see. I mean, this is a very significant cluster. I would be surprised if we lost that in any short term. Okay, so just another kind of snapshot in the long-term holder zone. Something I really just wanted to highlight. Note that we're kind of trading sideways. I named this thing the plateau of patience in the week on chain yesterday for Glassnode, but this kind of period where long-term holders supply, it kind of hovers up and around near the all-time high, but it's just kind of sideways, right? You can see it here through 2018, 19, and into 20. You can see it, yeah, to a little bit of a lesser extent back here in 2015 to 16, but we're kind of in this holding pattern, right? There's not really too much momentum in either direction. When we come to long-term holders, this is what I call the zone of peak hodl, when they suddenly move into a massive profit, right? This is generally as price rallies to the all-time high. They start to spend, they move into profit, and then we go into full distribution territory. Breaking all-time high is essentially when long-term holders start to spend. We are some distance below that. I think about 24% of the supply. So anyway, my kind of gut feel here is that there's not much gravity in either direction. I don't see any major reason for long-term holders to sell and take profit. I don't really see too much reason for short-term holders who bought the bottom to sell and take profit. We're kind of in this middle zone where there's not really that much momentum in either direction, in my view. Right, now, this messy thing, let me just clean this up for 1 second. There's a lot that I want to go over here, but we mentioned at the start that the question has kind of floated around, oh, where did people come from? Now, dormancy is a great metric. Dormancy is one of these tools. Sorry, let me just set this up. I should have set this up before I hit record, but now you can see the bones of this thing. So dormancy is the average age per coin spent. So we look at all the coin day destruction. Remember, coin day destruction, we look at all the spending, how old were those coins times their volume, right? So it's basically looking at how much time, holding time was flushed out, and we divide that by the transaction volume, right? So it's how much coin time was destroyed divided by how many coins were moved, which leaves you with how much time on average per coin. Now, I've got 3 different cohorts here. Obviously, short-term holders in red, the whole market, the average for everybody in yellow, and long-term holders by 2 different buckets. Both of these are looking at what was the average over the last 30 days. The reason why these are both over the last 30 days, just for very simple math, dormancy for these groups is fairly consistent. It doesn't move around a great deal. It's not overly volatile. It's a fairly consistent metric. For long-term holders, however, if some guy, because they spend so much less, imagine that there's just one particular day where someone spends coins that are like, I don't know, 8 years old. They're going to have a stack of coin time in them. So a single spend, because there's also not that much volume moving around, they're a smaller spend proportion as is, but then they're also very old. That the band of long-term holders is literally everything from Genesis up to 5 months ago. So what I've done here is look at only over the last 7 days is the light blue, and then over the last 3 days. So the way to think about this, over the last 7 days, what is the average area on the price chart where long-term holder coins came from? And you can see we're pretty much everywhere. And again, this is the average. This doesn't mean that this is the only place they came from. They could come from anywhere. But on average, what's the average age band? And we're talking about pretty much the entire 2021, 2022 bull cycle, right? Makes sense. But over the last 3 days, what's the average? And this is really nice, right? You can actually see it's top buyers. This is precisely what we're looking for. Now, just to give you a bit of a snapshot, I did actually build in a tool. Let's change this here. Now I want to look at what was that same chart, because that's obviously going to be referring to our current day. What did that look like 365 days ago? Exactly 1 year ago, we were on this pink line right here. And you can see that short-term holders were basically selling the top. the average across the entire market was basically this. Was, remember, if you can recall, there was a huge amount of accumulation as we came off the all-time high. These are people who started spending because they're like, oh shit, maybe it's not actually a bull market anymore. But then look, the long-term holders were the ones spending from the run-up. This is kind of the average zone, but you also had a bunch of people spending from up here on the rally higher. So it kind of gives you a bit of a snapshot into whereabouts the market was actually spending and selling from within using dormancy to actually understand that average zone. So anyway, the kind of takeaway, and it gives us a little bit of the gauge into things, where exactly are people coming from, right, when they're long-term holders, and you can see they're pretty much coming from this top. So now we can add another layer to this, just to give it that little bit more kind of justification, and this is where we bring in long-term holder SOPA. So remember, SOPA, let me just go on a 5-year chart so you can kind of see this thing. SOPA is the average profit or loss, if it's below 1, profit or loss multiple on spent coins. And here we are purely looking at the long-term holder cohort. Cool. Now you can see here's a value of 1, maybe a little bit small on the screen, but this is 1, which is basically break even. So you can see that on average, long-term holders, they've been in a loss for some time, and really only in the last couple of weeks have they started spending at break even. So spending at break even is really coins in this zone. It kind of aligns with our thesis that this is kind of the main area. People are just looking to get their money back. And if we just go back to this chart here, I mean, you finally, after a year and a half, come back up, and these guys start to take their money off the table. This over time was a much, you may remember, you may have to go back, I don't think many people actually go back, but I do recall looking at this particular zone, and these bars were much, much higher. There was a huge amount of coins there, and we talked about it at the time. It was basically, there's a lot of people who were just kind of sitting there waiting, right? And again, I see myself in some of this data. This has decayed over the course of, it's probably 6 months maybe since we looked at it. A lot of that got transferred down here during that capitulation event, right? When FTX blew up and Bitcoin's dead for 10 years. But you can see here that because we're at break even, we've got most of the coins getting flushed out from here. And again, these are all averages. So some guys are going to be taking a little bit of profit. Some guys will be taking a little bit of loss. It's all kind of a bit of a mix. But you can see that all of this data is really aligning with where we currently are. And the big takeaway for me is that long-term holders are still in the process of they're still getting flushed out. There's still many, many people who do not believe that this rally could, maybe, just possibly, actually be the start of something much longer. It's a little bit disbeliefy, if I'm perfectly honest. So then just jumping across to and closing out with our long-term holder realized profit and loss dashboard. You can see here, remember the ghost trace here is short-term holders. So we can just do a bit of a comparison and see what the other group's doing. Short-term holders are quite nicely in profit. They've basically got 2 legs higher in terms of total profitability. Long-term holders are still in the red. They're only barely at break even. You can see that their long-term holder realized loss, I mean, profit is barely ticking higher. So again, all of these things, whether it's looking at from dormancy perspective, whether it's looking at from P&L, SOPA, all of these things are telling us that for the most part, they're still in the process of flushing out losses. And you can actually see here, note that this, let me just zoom right in here. You can actually see that this uptick happened on the dip lower. People who wanted to sell, when we got to, I forget the price, 25K or whatever it was, 24, we sold down to 19.8. This was exactly on the realized price, the 200-day moving average. There's a bunch of support levels, and long-term holders got flushed out like, oh shit, it's over. It's going back down to 0. We're still full of touch and go long-term holders who are willing to take an L even after holding for this long. It's amazing watching these, like just watching people get flushed out for months and months and months, and then they just don't seem to get it. When we look at transfer volume, here's a really cool chart, right? So this is the transfer volume by long-term holders, which is in profit. And you can see it's only barely, it looks a little bit like the realized profit chart, starting to get some momentum. But look, transfer volume in loss by long-term holders, this thing is still rip-roaring, right? They are still moving around coins at an enormous rate, taking an L. We are still flushing these guys out. It really is amazing to watch. So a bit of a view here, right? This is kind of expected behavior. This to me really screams it's a little bit disbelief rally. There's a lot of people who just simply do not believe that Bitcoin could possibly go higher. There's a lot of PTSD, right? That bear market in 2022 was nasty. So basically, what this is telling me is that we need to just, over time, chew through. And when I talk about we, the market needs to just chew through these people, right? Essentially, they're gonna sell. Some of the market's gonna chew through it. They're going to create resistance every time we get to a supply cluster. This is also, by the way, this is why technical analysis works, right? You go back and look at these price levels. Of course, when you spend significant periods of time trading in a particular zone, right? So I suspect that the 42,000 down to 30,000 zone, in fact, let's have a look at this. 42,000, there it is, 42 down to about 32 or 35, whatever it is. This is the pre-lunar zone. There's a bunch of guys here who still have their coins, and they're probably going to create a bit of resistance on the way up. It's why TA works. It's why Onchain works. It's why we see these psychological behaviors play out. So anyway, it's not really kind of anything aside from just understanding the market structure, being able to see what's really going on. I really do stand by that. I kind of feel like we are fully just neutral. There's just no momentum in my view in either direction. If the market wants to keep heading higher, that's great. Prove itself. I would not be surprised if we end up back down here as a support level if that happens. If we do trade lower, I would not be surprised to come and retest that 25, 24 type level and retest that floor, right? And I'll tell you what, I really would like that to hold. I don't think it'd be a great sign to lose that level. It's not my base case to see that. Touching it, yes. Blowing through it on a monthly basis or a weekly basis, not in my base case at this point. So we're kind of in this zone where it's like we've put the bottom in, most likely, and we're kind of sitting at the top of it. There's not really momentum either way, and we're still going to churn through all these long-term holders who are still only just breaking even. So anyway, hopefully that's a bit of a useful snapshot. Some kind of interesting and new tools just to kind of think over and mull over. But as always, if you've got any questions, let me know, and I'll see you in the next one. Cheers.